The Hedgeless Horseman here. It's May 27th, 2025. I recently got back from the Atlantic One conference in Mallorca. I've been to, would be my third conference in short order after the Top Shelf Global Commodities Expo in Atlanta, and then Fort Lauderdale, then Atlanta. I don't even remember if I actually did a wrap up of that one yet. Maybe not actually. But I'm gonna I'm gonna start by doing the Atlantic one in Mallorca since it's more fresh. First of all, look at the markets. It's interesting. I mean, I remember seeing a few red days. I mean, I barely watched the markets. Didn't do, I think, any trading at all really for the last 2 weeks since I was away. And that's actually kind of relaxing. I mean, I don't think any case, or I skimmed the news, etc. But I don't think any holding came out with some bad news at all, which is great. Actually, I think some companies came out with some really good news, and we're gonna look a bit closer at one recently. Anyway, gold is remarkably high. I mean, again, just what is it, $170 from the all-time high. Silver, hovering above $33. Really good prices, and who knows what is happening here. I mean, the funny thing is always, when we saw this in gold, I already saw people saying that, whatever, the cycle has topped. I saw tweets about, $2,600 gold, yada yada. Went back up to almost 3,500 again. Then, people kind of changed their tunes, like, it's probably going to do a new all-time high soon. Then it went down even lower, down to 31.25, I guess. Kind of the same stuff happened. People were, picturing $2,600 gold, or at least $3,000 gold, which wouldn't be far off, right? And then it went up again. And again, if there's anything I take away from this is, as always, I have absolutely no idea where gold is gonna go in, especially the short time frame. Who knows? Maybe this is a bull flag. I don't know. But you can be pretty sure that. I mean, I actually seen some people that were kind of bearish. I don't know, a month ago or something. Now they think the next up leg is gonna be here soon. And again, I don't know. That doesn't really matter because I'm invested in mining companies, especially gold mining companies, where if this was the price of the companies, I think the value is up here or something. So it doesn't really matter if they go up or down 20%. It's like rounding errors. I mean, some stuff out there again is so dirt cheap that it's crazy. Even if gold went down to like $2,500, even $2,000, they would still be cheap. So I don't really care about that. Anyway, this was the Atlantic One Mallorca conference, Spain. Absolutely beautiful venue. Have some pictures. So this is from the hotel. Another one from the hotel where the conference was at. Night picture here. We have some nice sailing boat out there. This is basically the format of the conference. I mean, obviously there's lunches and dinners and all that. So everybody kind of got chance to talk to the companies and other investors, etc. that were there. I mean, I like this kind of intimate type of conference. That's why I necessarily don't like PDAC, because like you can never get a hold of anyone really, and a lot of time the ones you might want to speak to in the let's say companies, I mean, they're not at the booth necessarily. So that's more of a zoo. I much more prefer these types of events. So shout out to Michel who invited me. Thank you very much. He has some other he has some other conference as well, and he does road shows in Europe. Anyway, so they had people presenting here on stage showing the presentation, and it lasted for about 1 hour per company. So they really had time to go through the slide deck in a sense, and people could ask questions in the middle of the presentation, or if there was time after, some Q&A. And again, since everybody was quote stuck in this hotel, plenty of chances to follow up with people later on, or in between breaks, or at breaks in between presentations, etc. And I knew quite a few of the companies, not in depth actually, but some I actually want to take a close look at. One obviously that stands out is Amex Exploration. I don't know, I guess some people saw I put out an article on Amex, what was it, last week I think, on Monday, when there was a market holiday, and I didn't actually realize that it was a market holiday when I put it out. But anyway, I actually think that's maybe better, gives people to chance to read up on it, and won't feel like they're missing out if it gets released, let's say in the middle of the day, and then people find it like 3 after it's been published and think that, well, okay, it's too late to look into it now, because like any whatever a typical news item, let's say, I mean, if there's a fat discovery for a company and it's been out for 3 hours, then you find it, obviously you might not be the first to buy into that very news release. But in this case, this was my investment rationale for Amex, and like most of these companies, I don't think you need accuracy in the sense that plus or minus 10%, even 20%, whatever. I mean, if Amex works out as well as I hope it works out, then it could go to much higher levels, and I would think be acquired and maybe slap on a premium on that. So again, I don't want precision. I don't want to catch the short-term low, for example, if that's needed. I mean, then it's probably not a good case. But of course, that's what most people are, short-term traders. Anyway, so the news that came out, this was I think 1 or 2 days after I put out the article, so the timing was kind of perfect. Because I knew there was going to come an MRE out, and my article was already done. But since I was at 2 other conferences, I was out traveling. I didn't have time to put in the finishing touches, etc. So I thought, okay, when I just get back home for a brief moment before I'm going to Mallorca, I want to put it out, because obviously the closer, or the longer it takes, the closer we are to the next MRE. So I'm glad that I put it out just before the MRE and didn't put it out after the MRE, because obviously then I would have to rewrite basically the whole article. I mean, now the article is somewhat outdated in the sense that the new resource looks a lot better than one I put out, but that's obviously a good thing. The article is not outdated per se, because I thought it was a good case just based on the previous MRE, previous resource, and then they put out this, which is kind of, eye-opening. Like the Champagne zone, formerly the high-grade zone, contains 831,000 ounces in the measured and indicated resource at a grade of 16.2 grams per ton, and 128,000 ounces inferred at almost 10 grams per ton. That's obviously quite remarkable, because you're at 950,000 ounces M&I plus a bit of inferred, grading almost 10 grams, but most of it grading 16.2 grams per ton. How many resources out there contain deposits that are not in production or have been mined already? Have almost 1 million ounces of 10 to 16 grams per ton. 8 grams per ton is high grade. right? This is kind of bonkers grade. It's not up to par with what Foster will, but still, this is somewhat one of a kind resource right now, I guess. Again, I know there's a lot of like historic resources, small old timer mines or old timer resources with maybe 30,000 ounces or 30,000 ounces of like 15 grams per ton, maybe even 20, or like historic production. But to have almost 1 million ounces of half an ounce per ton of gold, that is remarkable for sure. This is not at face value, this is absolutely not a run-of-the-mill deposit. This should be extremely profitable if this grade comes into the ballpark. But it seems also that the closer the drill spacing is, the higher the grade goes, which is absolutely great. So basically, the more detail or the more the deposit has or will be drilled in detail, the better it gets. That's obviously a pretty good sign that, hey, these grades might actually be close to the real deal. So 172% increase in measured and indicated. So I mean, the PA was already very robust. Yes, it's a PA, so it's not the highest confidence in terms of economic study, and usually PAs are over optimistic. So we have to account for that, and which I wrote in the article if I remember correctly. But note again, it's like the high grade zone is as typical. That's what would be expected to be mined first, so you get the payback very quickly. So it's like it kind of lowers the risk, right? I mean, if you pay yourself back as quickly as possible, then everything on top of that is just free gravy. That is the net profit in a sense from the mine. So if we look at, for example, years 1 to 5, and that's based on basically the high grade portion that would be mined. Okay, it's actually lower than I remember. I recently talked about it on K report. I thought it was $800 something, but that was the life of mine ASIC. Where is the life of mine ASIC? Here. $807 life of mine. So I mean, the resource, the high grade portion jumped up quite a bit, and the resources as well. So it's like, if you can mine, let's say, I don't know how much you could actually mine from it, go into reserves. But let's imagine 6 years, for example, of mining something close to 16 grams per ton. I don't know what the ASIC would be at that point. I'm assuming it would be lower than this, assuming the same mining methods. Would make this capex back in probably a year, less than a year. At these gold prices, probably less than a year. And I mean, the financial results were already very robust. Here you can see after tax IRR 3,000, that's 68.2. What do we have up here? $1.1 billion NPV. At $2,600 gold, which is quite below where it is, 914. After tax payback 59.7. After tax payback period a bit over a year. Really good NPV to capex ratio. So imagine again, larger resource, but maybe more importantly, higher grades in the Champagne zone, and even higher gold price. What would the after-tax payback period with higher grades plus a higher gold price, less than a year, looks pretty slam dunk, especially in a PA study. But I mean, it's extremely short regardless. I mean, this is just phenomenal numbers. And even if, like, let's say they go in the way of a toll milling startup, much probably lower capex than the already low capex to build this on a commercial scale. Well, if you're trucking 16 grams per ton material, you don't need a lot of tons to toll mill, and that should be profitable even if you trucked it. I don't know how long you would truck it. So that's kind of the beauty with Amex. It's a almost unique kind of deposit at face value because the grades are, I mean, kind of ultra high. There's very few that are in this category of having 16 grams per ton of almost 1 million ounces. That this has not been acquired yet is somewhat of a surprise, but I guess that also, and we know, insiders have been buying like crazy not too long ago. Sprott bought in the open market, and he's probably not looking for 30% returns. That's not really Eric Sprott style. Also, Eldorado topped up in the last financing, so they obviously like it, and that was with the old PA or the old MRE, and there's going to be a new PA coming. I don't know exactly when, but I assume especially the payback and IRR, etc., and in PV is going to be even better than this. Again, at these gold prices, absolutely remarkable. Could obviously survive much lower gold prices. I mean, after tax of 40.2% at $2,000 in the base case. That's high enough, and then you obviously get everything else for as gravy. I mean, after tax payback period 1.8 years, so then you're free rolling in less than 2 years after in 2 years after production, with a gold price of 2,000 with the old grades. So yeah, I mean, this I think is a standout gold project in the space, especially in Canada. I don't know a single other asset that has these kinds of grades. So yeah, I mean, again, I think this is going to be either acquired and or actually get into production. And if either of those happens, I think the odds are that people are going to make money from these levels. I mean, if these economic numbers, or I should say the new PA numbers that I expect to be even better, if they get 20% within the ballpark of what's actually going to happen, I think this is going to look really cheap, because what's the market cap? It's 160 million CAD, which I would think this mine is going to do in, again, less than a year. So yeah, and especially let's say you put in a toll milling operation. I don't know what that would cost, but let's say 1,200 ASIC or something, and if you can produce even 50 to 100,000 of that, then you could kind of self-fund after that the commercial scale production. And also obviously there's a lot of zones that are still wide open, including the high grade Champagne zone at depth, because they've hit it down to 1.6 kilometers already, so that's gonna probably extend. And if the grades hold up, you could probably mine this deposit very, very deep. And then you have all the other zones, plus you have the increased, where's the increased land package? Yeah, so here's was the original land package, so they added this, so they, supersized it. And as usual, that's what major mining companies want to see, especially if they're gonna buy it out, because even if you paid fair value for the currently known deposit, then you would at least get all the exploration potential for free, right? And have maybe in the future kind of a hub and spoke model. So who knows? Maybe once this gets up and running, I'm assuming it's going to get up and running one day, maybe you'll have a mining camp here for 30 plus years. I wouldn't rule that out. No guarantees, of course, but that I think makes a lot of major miners more comfortable acquiring it, because it's like Pierre Lassonde talks about optionality. It's like, okay, if we're paying fair value, even if they would pay fair value, and the current market cap is not obviously close to fair value according to the PA, and even less so I guess for the new PA, then you get all of this for free at least. And the champagne zone, etc., already shows that yes, there's indeed very high grade gold here. So theoretically, worst case, you get your money back. If any acquirer ends up making a lot of money on this and then prove up that there's more deposits around here, then they basically bought that for free at the time of purchasing it, right? And then add that, with maybe a rising gold price, whatever. And I mean, again, right now the market cap is so much lower than the actual fair value NPV at current spot price that there's a huge margin of safety. I mean, personally, if I had $1 billion and I could buy Amex at spot prices, I mean the current market cap at the market, I would, as an owner, I would be happy to own it. Then I pay whatever 229 million CAD to put it into production, maybe make that back the first year, and then I'll double my money the year 2, triple my money year 3, quadruple my money year 4, etc., etc. That beats the deposit rate of a savings account, right? So it's like even if theoretically it only had the high grade zone, maybe I would make a shit ton of a really good return just on the high grade portion alone. So it looks like a remarkably, in a sense, low risk development story project. No huge capex, good infrastructure, good jurisdiction, and all that. First Nordic was also at the Mallorca conference, and I think really the 1 hour presentation time was really good for First Nordic. I mean, it kind of, it hit me when I was listening to the presentation. Obviously, I know the case probably more than most people, except for the people actually in the company. But it's like, I think Taj did a great job describing the merit, just how good the Borealis deposit is itself. But that's obviously just half the story in a sense. Because you're listening to, you get the, fresh, let's say, highlights of the Borealis deposit, and you're like, yeah, goddamn, this is basically a Young Davidson deposit, and Young Davidson was acquired for 950 million when the gold price was, I don't know, $1,100-$1,200, let's say 1,200. So basically almost a third of what it is today. And that's still making bank for Alamos up until this day, and there's mine life left in that. So it's like, how many Young Davidson deposits is there out there? Not many, obviously. I mean, it's been Alamos flagship mine, I think, for a long time now, up until I guess the Island Gold deposit, and now that together with Magino. Anyway. So this kind of like Amex, these deposits don't grow on trees, but kind of like Amex, these companies are currently being priced like they grow on trees. Amex is trading for a bit higher than sunk costs. First Nordic, I guess, is trading higher than sunk costs, but at the same time, if we account for the fact that Agnico Eagle has spent 10 years studying the Borealis deposit and doing all the whatever environmental studies, hydrological studies, archaeological studies, community relations, I mean, that's in a sense priceless, because you can't pay your way out of that requires time. So how much that is worth, that's impossible to say, but obviously it has huge benefits, because in an alternative scenario, you would start, let's say, make a Borealis discovery today, and then you would have to spend years to drill it up, of course, but to redo all that. So you're basically buying the sunk costs and 10 years of Agnico work, etc. for, I mean, I don't know, 10% out of NAV. I mean, even accounting for like First Nordic currently on paper owns 45%. I mean, this is not even close to the NAV or NPV of Borealis, current spot gold price, not even $2,000 gold price, etc. So obviously ridiculously cheap, in my opinion. Same with Amex. and that's obviously why I am long both of these stocks, because they are priced like they have run-of-the-mill deposits, and that gold is not where it is. That leaves a huge amount of upside for me. And back to my previous point, the thing is that, like, AMX obviously has exploration potential at depth, extending the zones around the land package, but First Nordic has obviously, what is it, 8-9 targets right now, and we're waiting for the first assays out of the IDA discovery. So that's you could I mean, I think, as I've said before, First Nordic has one of the absolute best gold exploration stories in it. So in a sense, Barsele, and the fact that it's not pricing in anywhere close to the value of Barsele, that's in a sense maybe half the picture. Then you add the exploration potential, which is some of the highest in the sector in my opinion, that you get for free. So if they drilled 100% dusters, it would not take away the fact that Barsele itself is probably 3 to 5 million ounces at least, and should make a lot of money. That is like extreme version of free optionality, and free optionality in spades. And then I guess we have some, I mean, for example, trolls here like Mojo, for example. And, you know, I don't know, it's hard to say sometimes who are like trolls and who are just, you know, typical junior investors in a sense. There's like, okay, they look at the share price and it's like, oh, you know, the share price sucks, whatever. And as I point out, where do I point that out? It's like, this is the short of Lundin Gold, which over 10 bagged over this time. You can see how long the consolidations are. And I've said it, I mean, I've covered this extensively. The actual upside surprises, you know, net new highs, let's say, they only happen like 5 to 10% of the time, even in very, very successful stories. Most of the time the stock will be consolidating, and most people have no chance whatsoever to catch a 5 to 10 bagger or more, because there's almost nobody out there that can just sit in a stock for more than whatever. Because if people are already complaining about, so this peaked in February 18th, so what's that, like, let's say 5 months. Here you have consolidations for, you know, few months, several months, maybe actually a year. Here's like 3 years, I think, consolidation. Anybody who just held through Lundin Gold would have beaten the market handedly up until this point, right? But it doesn't look like that when you're in the middle of it, obviously. And who would make even more, obviously, the ones that would also buy every single dip, because every single dip turned out to be an even better buy than the whatever previous high. Obviously, this here is going to make more money than this short-term top here. This is going to make more money than this short-term top here, etc., etc. And this was the lowest price back going back to here. That would also prove to have the, you know, highest future returns since back here. So basically, the only thing you could, you know, do to make even more money in Lundin Gold, let's say, than just hodling would be actually put in even more money at every dip. But that is the thing. And again, I think this guy seems to be a troll. But my point is that, you know, troll or not, is like, what did he say? It's like, market's not boring, just these guys. And then it's like, okay, we're about to get the first results from like a, let's say, $25,000 drill, 25,000 meter drill campaign. Obviously, that's would be one of the most action-packed drill stories in the entire space. But if you look at the share price, yes, then I get it. It's been boring because there's not been net new highs since February. And you can see the exact same thing play out in Lundin Gold. So if you're one of those that, I'm just going to buy when it's hot and going up and it's exciting, okay, you do that. like if we take this guy at face value, he said that what was it, like, might take a little loss. So basically, I don't know, I don't think he even owns the stock. I'm 100% sure, but let's say he bought here or here, whatever. Okay, so he bought higher than now, and he's about to sell low. I mean, that is probably the single main reason why people lose money. And obviously you have no idea what you really own, because nothing has changed. The only thing that has changed is that gold price has gone up, and we're closer to drill results actually, that we'll see if that free optionality play, if that's about to pay off. So in a sense, the story is worth more and is closer to becoming exciting, and the share price is lower. And if you decide, well, I'm gonna sell now, obviously you have no idea really why you bought. You have no idea about fundamentals. You have no strategy at all, except buying stuff that's already gone up and then sell when they have gone down. So good luck to Mojo. Another story which I want to check out, that's Heliostar. Heliostar has been doing quite well after the, I don't know exactly when the transaction happened. I mean, they got their projects in time with some insider selling. Got their projects in time with at the same time as Integra, which I really like Integra. This was Mexico. At the time I wasn't that excited, but I listened to Charles Funke's presentation down in Mallorca, and it appears actually that I think this has room to run. Again, from a fundamental perspective, I think he laid out a pretty good vision, especially a good vision for any long-term investor. So basically it feels like I think he's a geologist, but him and I guess his team has a good sense of, like, okay, how do we turn these rocks, how do we turn these projects into, let's say, the best possible investor returns as well. There's like, we have our two producing assets, okay, they're not the flagship assets, and Apola is the flagship project, kind of like, Integra has De La Mora as its flagship asset, really. I mean, if we're talking the strict MPV, but they're making money on Florida Canyon, right? So you have like these two producing assets that will at least hopefully unlock Anapola, and then they have two other assets in the pipeline, and there appears to, or it sounded like there's more exploration potential at one or both of these projects. That's obviously not then showing up in the MPV right now. So you have, in a sense, like 5 projects, and all could, well, I think it's cheap based on all 5 projects, some of the parts, but all of these projects could also get better with time. So you're actually, you're not paying you're probably not paying for the sum of the parts, and you're not paying for any of the, let's say, inherent exploration potential that also then comes for free. And if they can also use this, let's say, if it's undervalued like Integra, for example, it's one thing if the projects, the peripheral projects that you're not really paying for, if they can't get monetized, because then in a sense it doesn't even matter, or it doesn't need to matter, because the market might just simply like, no, we're not gonna, since Mr. Market only really can have 1 or 2 things in its mind at any one point in time, then it's not gonna, okay, I'm not gonna price in the pipeline of projects, let's say, or not much of it. I'm gonna price whatever Heliostar based on its current production, whatever. But if these, can help unlock even bigger production, because they have, where is it? Here, for example, production profile. So here you have the arrows are kind of the upside surprise in a sense. So if we just play with the idea that they can literally do this can happen. These arrows can happen. There's like up to 200, let's say maybe 200,000 ounces or whatever, 163, I guess. at least in 2028, and I mean it will be just kind of growing from next year. Okay, fast forward tape a bit. Okay, if this slide comes into reality, and who knows, maybe gold price holds firm or it actually goes up. Obviously, if they don't have much dilution as well, if they can, you know, kind of self-fund most of this growth from the current production, obviously the market cap would probably be quite a bit higher, and I think they have a target of becoming a mid-tier. That's not a bad bet at all. Kind of like Magna Mining, Integra, what have you. That's like, okay, fire and forget case in a sense that I know what I'm paying for it. I know what the vision is. If that vision translates into reality and I just buy it today, wait until all of this could potentially happen. If you're right, the stock might be up a couple of 100% at least. And in that case, you're obviously had a very good return. And who knows, I mean, they're looking for M&A, I think, as well. So it's like, this is probably going to be a moving target as well. Same with Magna. I mean, it's like they have obviously a one vision they can talk about, but in behind the scenes, like they showed when they picked up Green Hill and then picked up the KGHM assets, those were upside surprises on top of the, you know, face value they had at any point in time. All of a sudden, just a positive surprise happened. Value of the company went up, but they can't really put that in a slide deck, right? I mean, there's no M&A in this slide deck, for example. I mean, I got to do some more due diligence and think about this a bit more, but I'm thinking of putting, you know, some Heliostar into the hodl folios, where again, the bet would be kind of simple. Okay, I'm betting that, let's say there's a pretty good chance that they might come close to these scenarios, or even maybe surpass them, assuming M&A, or maybe, you know, some whatever exploration success. Plus, who knows, if the gold price keeps going up, then obviously that's just going to be a multiplier effect. So if I come back in, let's say, 3 years, I mean, there's always the possibility that, let's say, the stock will run even more. Then you could at least, you know, if you find something cheaper, you can take profits. Otherwise, I mean, let the bet play out, let's say, unless it gets really overvalued and you can see even that, you know, what's going to happen, or the potential catalyst over the next 12 to 24 months has no hope really of making the then current market cap look cheap. Well, okay, then maybe the risk reward is not that great at that point, but at the same time, you might have been paid already. So basically, it's an investment that paid quicker than it needed to, in a sense. I hope that makes sense. Also, Blackrock Silver. I've had some shares in this for a while. I mean, I don't think there's a lot of good silver juniors out there, not a lot of good silver companies. This one I kinda put in the AMX category, where it's like, you know, remarkably high grade resource, which looks very agnostic in a sense to the metal prices. Because I prefer to buy, let's say, good companies that should be mines. And typically they are projects that should be mines with much lower gold and, in this case, gold and silver prices, because otherwise it's kind of an optionality play where you have something that only makes sense at, you know, these gold prices. Well, then it's de facto an optionality play in a sense, because there might not be much margin of safety. But here, you like Amex, note that this is only a PA study. Still, initial capex estimated to be low. I mean, you could whatever add 30% of that, and that wouldn't be a high capex anyway. ASIC appears to be very low. I mean, obviously, silver is at what, $33 right now, so in $12 ASIC. 8.6 million ounces AG equivalent. That's very meaningful. Right now, only 7.8 year mine life, but they made some step out holes. I think the resource is, the red parts here, but obviously expansion potential. And I mean, I think they're aiming for like a 200 million ounces resource. Then that would be, up to, let's say, 20 years of hopefully very high grade gold and silver production in Nevada. And if you look out there, okay, what other high grade, the high grade silver projects, high margin silver projects that have made it into production, that would be like Gato Silver, Silvercrest, Mag Silver. Well, they've all been bought in the last, what is it, like 6 months or something. Which, again, going back to the point, like which I did with Amex and Barsle, the market is treating some of these deposits like there's an abundance of them. I mean, they're not even, again, pricing close to the quote fair value at spot prices according to economic studies, or inferred economics in the case of Barsle. Okay, so what does that mean? It's like, oh yeah, I mean, these are probably not going to become mines, these deposits. That's why they don't need to price in how valuable they would be in a mining scenario. Well, where are you getting better projects than some of these projects here? Where are you going to find a new Young Davidson deposit with 100% 100 kilometer land package in the case of First Nordic? There aren't any, right? AMX, where are you getting almost 1 million ounces of 16 grams per ton in Quebec, Canada? There are no deposits. Where are you getting this kind of high grade silver and gold in jurisdiction like Nevada? I don't think there is any. I don't know. Might be private companies, for example, or a private company. Other than that, no. I mean, the let's say whatever tier 1, tier 2 projects, whatever you would like to call them, they're going to be the best projects around. Whether gold is or silver is at $3,500 or $33 silver, or if gold is $2,000 and silver is $20, etc., etc. They are going to be the ones that they are the best projects. They have the highest margin of safety. They have the highest margins. They have the highest whatever mine lives, longest mine lives. They are in the best jurisdictions, let's say. That doesn't change. So it's like, okay, silver goes up. Will other silver projects work? Of course they will, if silver prices stay there. But maybe not if silver goes down. But these grades that Blackrock have, yeah, they would probably work. Assuming, again, the PA numbers are somewhat close to reality, etc. And then it's like, maybe people have like, well, maybe the resource doesn't hold together, yada yada. I mean, that's where the risk reward comes from, right? I mean, it's not, these stores are not priced like they will work. Some are, I mean, they're kind of priced like they won't be mines in like 10 years or whatever. Or gold and silver is going to be crashing 50% at any point in time. If that does not happen, and these projects are close to being as good as they look on paper, or at least in the minds of a mining company, then they're either going to get acquired or they're going to put in production by these juniors and actually work. And most of these are not like super high capex projects, so there's a legitimate chance that they could actually be put into production. If that happens, if some of these stores go towards production, I think at the same time they're probably going to get acquired, because we've seen that a bunch of times where unless they run too much, like Pure Gold Mining did back in the day, for example, it reached like $1.2 billion when the gold price was $1,700, and I've heard it's like the company got so highly valued that nobody could really acquire it in a sense, because nobody want to pay whatever a 30% premium on $1.2 billion of Pure Gold Mining. Well, then that's a kind of a luxury problem, right? Because you've already been paid. It's already pricing in that this is going to be even maybe better than it looks on paper. Then there's not much to complain about, right? Because you should be selling in that case. So if whatever Blackrock went up to like 800 million market cap, and then rubber meets the road, then let's say it doesn't work out, well, then you're going to be paying $1 billion, $2 billion, $3 billion, $4 billion, $5 billion, $6 billion, $7 billion, $8 billion, $9 billion, $10 billion, $11 billion, $12 billion, $13 billion, $14 billion, $15 billion, $16 billion, $17 billion, $18 billion, $19 billion, $20 billion, $21 billion, $22 billion, $23 billion, $24 billion, $25 billion, $26 billion, $27 billion, $28 billion, $29 billion, $30 billion, $31 billion, $32 billion, $33 billion, $34 billion, $35 billion, $36 billion, $37 billion, $38 billion, $39 billion, $40 billion, $41 billion, $42 billion, $43 billion, $44 billion, $45 billion, $46 billion, $47 billion, $48 billion, $49 billion, $50 billion, $51 billion, if it was trading at fair value, you should probably have taken them, taken profits already. The flip side is, let's say it doesn't get up to 800 million anytime soon, and then they put into production and it works, well, then it's gonna go up to 800 million to fair value, right? That's why, I mean, if we're talking like, quote, hodl stories where time is not that big of a deal, it's like, okay, we know, the only thing we know at any point in time is what price we're paying. Obviously, what is the, I mean, Heliostar, for example, it's not right now pricing in that with pretty low dilution, they will reach a market cap or a production profile of, let's say, 200,000 ounces plus within 3 to 4 years. If that happens, you'll probably make money, right? Blackrock, it's not pricing in that. Don't they have a sensitivity analysis? Here. Okay. After tax IRR. Silver price. This is what, 1900 or go. Okay, silver price. Okay. What the heck? Is this the base case? Anyway, so let's look at, okay. What's that? I mean, it's still, 20% silver price plus 20% gold price, not even close to the current spot prices anyway. So, I mean, you could obviously play around with this stuff, but it's like, it's not even close to pricing in any of these MPVs, right? Even if you, whatever, I mean, account for the metal prices, increase initial capital by 10-20%, whatever, increase cost, for example, and again, using the current metal prices, I mean, it's not going to come out to 113 million CAD, right? I mean, I don't know how much worse it would have to be. And then, of course, the risk is that what if this is somewhat close and it's going to get better and metal prices are going to stay here or even go higher, and again, they maybe put it into production, it works, well, then it's going to obviously go higher and price in the, whatever the fair net asset value or PA. I mean, that's how you get paid. So like when people are like, oh, I'm looking for the sure thing, whatever, it's like, oh, this might not work out. I mean, none of these stores are pricing in that they're nearly as good as they look and they're actually got to get into production and or acquired. And then the question is, well, okay, if not these projects, if the quote market is right, what other projects are there out there that are better than some of these? That's got to be a very short list, right? And if only one of these works out and actually are as good as they look, and let's say management doesn't fuck it up too much on the way to monetizing it, well, it's going to pay for, let's say, 3 stores. One is probably going to more than pay in that case for the other ones that went down. And I have a hard time seeing any of these stores go down to zero. It's like, how on earth can the Perron project for AMX be worth 0? How can they go bankrupt? I mean, none of these juniors have any debt as far as I know. Yes, if you put them into, towards production, they would potentially put on debt. But that also means that, okay, rubber is on the way to meeting the road, which means they could also work out. And if they work out, then you're going to make money, right? Or sell going into production, whatever. Ride that second Lassonde current. Like, is Barcelona project going to get worthless anytime soon? I mean, no. It's like, not with those grades and widths in Sweden in that place, right? And mining friendly communities around, etc., and technical work done by Agnico. Heliostar, yeah, same thing there, kind of. Is there a guarantee this is going to happen? No, but if it happens, you're probably going to make money, especially if they limit dilution and all that, and if gold silver prices stay at around these levels, and maybe there's some M&A. So I mean, there's upside scenarios to the upside vision as well, which is not really accounted for. Borealis was also there. They're about to start, small scale production from their fully permitted Borealis project. Sandman is actually a quite interesting one. Let's look at. So Sandman highlights. Not a huge project. Expected to be a very low capex project. 121 US post-tax at $1,800 gold. 31.5 million pre-production. PA highlights 9 years. This ASIC, yada yada yada. Again, if this was in production today and these metal prices were, metal prices are where they are, and this would get somewhat close to what the ASIC would be. Obviously, they would be making quite a bit of money even with a modest 35 to 40,000 ounce production profile. And if it only costs you like 31.5 million of pre-production to get there, yeah, I mean, obviously one would try to, at these gold prices, one would try to rush this into production as quickly as possible, because this would make some legit bank if these numbers hold up at today's gold price. And yeah, I mean, at face value, this project alone would be worth more, especially at $3,300 gold, a few multiples of the current market cap. So again, is there a guarantee that all of that's going to happen? No. But again, from a fire and forget perspective, let's say you give them whatever 3 years, don't even look at the company. If they make it work and gold prices stay here or even go higher, well, then you're going to have a multi-bagger. So, pick enough of similar type stories, let's say. I mean, you know me right now, I think the sweet spot is the birds in the hand, advanced projects, the risk projects. They have already mining-worthy projects. I mean, this is not a tier 2 deposit by any stretch of the imagination, but it's a low capex project that could theoretically get into production and catch this cycle, assuming the gold cycle doesn't top tomorrow. And if that happens, well, you're gonna make money. There's no other ways about it, really. If they execute, they get this into production, and let's say they get Borealis Mining into production and expand that, yada yada. There's also exploration. So you're not buying a high chance of success, is I guess what I'm saying. And if success ends up happening, you're gonna make money on any one of these stories. They could pay for a couple at least of the other stories, let's say, if you give it 3 years. And who knows, maybe 3 out of 4, maybe 4 out of 4 stories become success stories, and you'll end up making 5 to 6 bags on average on any one of these. I wouldn't be too surprised if that happens, but obviously if 3 out of 4 ends up being successes, well, that's good enough, right? And again, I have a hard time. None of these projects are going to become worthless. Yes, you can get diluted. Yes, if you push towards production, use debt. There's still the risk, in a sense, of any one of them going bankrupt. But that also means if they go that route, that also means they have a shot of actually, let's say, becoming success stories and enjoying the current gold price, or gold price around these levels maybe, or even higher possibly. And if that translates into reality, all these economics, etc., you might slap on a few, it might not go up 3, 4, 5 times. It might go up more than that, plus add sentiment environment, etc., etc. So I think, some of these, or maybe all of these stories have, in my opinion, like serious multi-bagging potential. But I can't guarantee which one is gonna have that translated into reality. Maybe all, theoretically none, but I don't see any one of them becoming worthless in a sense. That's the beauty of the current low price environment, right? Also, Sierra Madre was there. What I like about Sierra Madre is that it's very much, let's say, you can tell that, where's the skin in the game graph? Yeah, okay, so management and founders own pretty much a quarter of the company. Retail high net worth only 75.8. First Majestic has 44.5% locked away. Institutional 12.9. So quite a low flow, right? And they're gonna ramp up their La Guitarra mine. And in some sense, reminding of First Nordic, for example, is that yes, this is actually in production, relatively small scale production, but the big thing about this case, according to management, or this project, is actually the exploration potential, that this might be a district, and obviously if that turns out to be true, because they're already historic mines, that could get upscaled and upscaled, gradually grow and grow and grow from the same project. And I think they're also, open to M&A activities. And it seems they're quite conservative in terms of, I don't know if they have really guidance out, but I think they're very much trying to, position this as a be conservative and let the upside surprises come to the upside in terms of let's say production cost and yada yada yada, and I don't see them rushing anywhere. It's like, that's what I mean by, this is like, it feels really like they're thinking like business owners in a sense. They're not doing anything just to appease the market in a sense. They know that this stands and falls with their actual value creation, like actual monetization. They don't want to quote bullshit the market or promise a bunch of stuff just to get a quick pump, etc., because they can't really sell anyway. And if they make this work, that let's say over the next 1 to 5 years this keeps on expanding, they have exploration success, they can just keep on, let's say, expanding the production profile. Well, fast forward 3 to 5 years, let's say they're producing 4 or 5 times as much as they're producing now. Obviously that's going to be trading at a higher market cap than 90 million CAD if gold and silver prices hang around these levels. And when management has this much skin in the game, you had the some of the previous operators of the La Guitarra mine, which are also in the story right now. They know the asset very well, and you can see there's a bunch of vein swarms, and you can see the scale potential here, etc. So again, this is, in my opinion, how you make investing easy in this space. And I know everybody dreams of these 10 baggers in a year or whatever. Those are extremely hard to find. And if you just live by finding them, you're probably, the odds are you're not going to have, that is extremely hard. But it's much easier to just look at the current market cap for whatever story, look at the current gold and silver prices, and just picture, okay, what does the management team want to do? What is the potential of the project? What is their vision? Okay, their vision is whatever. Same with Magna. Their vision is what? Okay, to get 3 to 5 mines up and running in the next 3 to 5 years. Well, if that happens and they execute, not super dilutive, yada yada yada, and it works out, well, it's going to be up multiples. Same for any one of these stories. Do you think you need, in that case, 100% hit rate or something? No. And whenever have we seen these types of juniors trade this cheaply with a gold price being where it is, where there's record margins in the gold sector? That has probably never happened before. Record margins, and these, every single one of these like projects, advanced, even producing ones, they're not pricing in much in terms of any of their projects actually working out, plus working out in the current metal price environment. So if that happens, and then I was going to say, God forbid that we get a sentiment upturn for real in the junior space, where they theoretically could start trading at above fair value, you're going to see returns you've never seen since beginning of 2016, basically. And we know sentiment is still crap. The big swing from sentiment is a tailwind, not a headwind. And again, pick enough of these stories where it's like, yeah, pretty easy to make a case. And the beauty is, again, going back to price, which is the only thing we know at any point in time. We know what we're paying for any of these companies. Imagine sentiment was high, Sierra Madre was trading at 300 million right now with the same fundamentals, same metal prices. Then you're taking a bit more, obviously you're taking more downside risk in a sense, because like more stuff is priced in. It's priced in that they're gonna go to maybe 1-2 times the production, and that's gonna work out, and it has to work out, and yada yada. So there's less upside because it's already priced in, and it's more downside risk because the market is already pricing in, let's say, a more positive future that isn't here yet. A low prices is the best offense and defense. The cheaper they are, the less you need to have go right for them to pay for ones that actually do not go right, and the ones that go right go up more because they're started off from such a cheap level, and the downside is always capped at 100% anyway. So as I've been saying a lot, it's like risk reward doesn't go linearly, it goes exponentially. Anyway, those were some of the ones that were at the conference. Also, yeah, and actually I didn't touch on this, but West Red Lake, they have, they've done a lot of work. They put in a lot of capital, and it's been a tough slog in the sense that like they've done race after race. So they poured in a huge amount of capital in addition to the sunk costs that were already there. So it's like in hindsight, yeah, okay, wasn't a fun. It's like this project required more capital than anyone thought in a sense, and the ore body was more difficult than the previous operators thought and all that. Yes, but that is now in the past, right? We're here now. They obviously put in a lot of work to figure out everything that the previous management did wrong, everything that the previous management maybe did do right, everything, basically pouring capital to make sure that this is gonna work. Is that a guarantee it's gonna work? No, there's no guarantee it's gonna work, but they probably are in a much better position than pure gold was back then. Plus you get right now $3,300 gold, which is kind of crazy, because like, okay, this is the same deposit with a lot more work. They have I think a production decline, etc. So they made a lot of, how would you call it, not advancements, but like they positive things, let's say, to the actual mine plan, plus a much higher gold price. And this very asset was trading at, for a time, 1.2 billion pre-production when gold price was 1700. There you get a sense of just how, one way to look at it, how irrational this market can be. Well, if this fails, obviously it's not gonna, this market cap is not even gonna look cheap. But imagine, how in hindsight, how extremely wrong the market was at 1200. And sure, there was no guarantee it's gonna fail, but at the same time it was still priced at 1.2 billion. That's a very optimistic market, right? I think it was for sure gotta be trading way above NPV. That is something that happens in high sentiment environments. So you could take all of these companies, whatever they're trading at, whatever their NPVs are or NAVs are at these gold prices. Imagine a time when stores like these trade at a premium to their NPV. So you're actually paying for more than just the bird in the hand. You're actually paying up for some potential. The market wants to take risks. The market is asking, looking for excuses to buy, that it can go higher because there's this potential. So don't worry about me overpaying for what's already known. There's upside surprise, so I'm going to buy this because there's a chance to make money from here after these stores might be up 300, 400, 500%. That's a high sentiment environment. So again, you can imagine, and then of course the blue sky case is that gold actually keeps on going and some of these projects advance even more towards production, and let's say the MPVs are up at, I don't know, like 8 times the current market cap. Imagine if the market slaps on a premium to NAV, premium to MPV, which has happened. And like I put in the AMX article, Integra Gold, when they had their Lamaque deposit, they got acquired by Eldorado Gold in 2017 for I think it was a 69% premium or 67 to spot gold MPV. So what Lamaque was, according to the PA, worth at spot gold prices in 2017, Eldorado paid up 67 to 69%. That actually turned out to be a pretty good deal. I think that has paid off for them, and I think that's kind of their flagship project. Imagine if you slap on a 60% premium to spot MPV, spot NAV on some of these stories. They would be trading at 10x where they are right now. More than that maybe. I am absolutely not ruling out such a scenario, and especially since everybody else is ruling that out. But history has shown this sector always crashes and always rallies. And when it starts to rally, once it begins, once a trend forms, people are going to look for excuses to buy. And then at the very top, a meaningful portion of the blue sky potential in many of these stories is going to be priced in. And we're so far away from that, and that's where the big upside lies, basically. And that's why I say the big surprises from a valuation perspective is to the upside in most now, or in this sector overall, especially with the good projects, not to the downside, because it's already pricing in the downside. Could they go lower? Of course, anything can go lower. That's not the point. The point is they're not close. They're not. The sentiment and the risk off mentality is so strong that the market is doubting everything. It's doubting that gold is where it is. It's doubting that silver is where it is. It's doubting that any of these projects will ever need to become mines. Yet many of these stories are some of the few projects that have a good to great chance of actually becoming mines and should become mines. Anyway, thanks for listening. Again, consider me biased. I own shares of some of these companies. Some are banner sponsors as well. Don't invest money you cannot afford to lose. And as always, I have absolutely no idea where the gold or the share prices of these units are going to be in the short term. I'm just, again, the only simple bets that I see is in the stories where you're like, okay, if the story plays out as I hope, and that's gonna, obviously you can't have a blue sky play out in a month or something. Let's say whatever, look 3, 4, 5 years even ahead. If these work out in a good way, they're gonna be trading, or you're gonna be up a lot. That's it. But I couldn't tell you what the next short-term move is. I have no idea. I just know that given where they're priced at today, and given the fundamentals in some of these stories, and given the potential growth profile in some of these stories, there's just magnificent upside potential. And that's usually going to coincide with the improving sentiment environment, even going to maybe a euphoric stage, and that I have absolutely no idea when that happens, because you can have the same exact fundamentals and it could be trading at wildly different valuation depending on the sentiment. Now I have no idea how to predict when sentiment is going to go up, but that's just a matter of when, not if, right? And that's the beauty of it. If every one of these were trading way above NPVs, way above NAVs, then you're taking a lot of speculation risk that the metal prices has to keep going up and the sentiment cannot go down. Now it's more like, well, we're kind of just waiting for sentiment to pick up alone, and who knows, maybe sentiment picks up in 12 months and some of these stories have increased their value by 50%. And then it's like when it actually kicks off, it's just going to go up way more than if it actually turned around today, because the company is worth that much more. So you know the market kind of is just owing you returns in a sense, and it's going to be more dramatic when that actually happens. Anyway, thanks for listening. Again, don't invest money you cannot afford to lose and all that. Bye bye.